Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So, situation is barely changing here. So, yesterday we already talked about this. And in the current circumstances, just shortly speaking, on the current situation, we suggest that it would be better to wait, not to do anything today, because, well, in general, market now stands overextended. So market stands on the bottom on the weekly chart. In recent third session, it was not able to keep going higher and stands flat. So today is CPI report, and we think that it's much safer just to wait for the moderate pullback, getting some clear pattern, and take the position later on some retracement. It's much safer than trying to take the risk, taking the position somewhere between in the free space, I would say, not knowing where to place their stop with a standing target around 37, 34. So, well, it's a bit not our way how we usually trade. We prefer to accurately calculate the risk reward, taking the position it supports, taking in consideration our bottom or sound levels, and if we will take position right here, it will break everything, all rules that we usually following. So by our opinion, it's better to not do anything for now and wait for a report on the CPI numbers. So our basic scenario is just wait for retracement on this thrust. We have great momentum, and it will be a great setup for a possible momentum trade. As market returns down a bit to the 30% support, the overall bullish impulse still remains, and we will try to take it, use it with the position taken in the support. That's the major idea. Still, I know that many traders prefer aggressive way of trading and prefer to make the event trading, I mean the release of the data. So here are some thoughts on the current situation. We probably could suggest the same thing that we discussed today in the euro currency video. In the euro currency, it's a bit easy because market do not have such a straightforward action. It has some volatility, there are some patterns exist, more comfortable points for placing of the stop orders and so on. On the gold market, do not have it. So in particular speaking, we'll take a look at the hourly chart, depending on what you prefer to trade. But in both scenarios, I would suggest better to using of the stop entry orders if you would like still to trade release of the data today. Why? Because if the CPI will be strong enough and the chances on a 50% basis cut will eliminate it, probably gold will start dropping here, because here is already some part of the 50% or 50 base point cut already stands in price. From that standpoint of view, it's better to use stop sell entry order. Your order will be triggered only if market will collapse. But if market start rising, you will be unfilled. So that lets you to avoid wrong direction. That's why we prefer, yes, it might be some volatility, you could get the just occasional fill. It happens because you're dealing with a data release. It's part of the risk, part of the game, so you have to acknowledge that. But in general, this scenario, this using of the stop selling order is safer than you just take the limit order here, selling, and just waiting what will happen. That's what about bearish position. On the bullish position, you have two options. First, using the same stop buy, for instance, somewhere above this area, 36.60, if indeed CPI will be very weak, market keep going higher, then you could try to buy somewhere in the middle of that. But here, theoretically, you could try to buy here as well, because take a look, in fact, your invalidation point will be below these lows, because we have potential for the butterfly, and if you intend to take the long position, you suggest that some tendency should exist, right? So we do not count on the downside collapse. It means that you could place very tight stop. Yes, you could place it not just below the lows, maybe slightly lower, just to make market to breathe a bit. So follow to your personal risk levels. Manage your risk according to your assets, according to your trading plan, and your principles of the risk management. But in general, I just explain overall shapes that we have, patterns, and where it makes reasonable to place your stops. So that's why on the long side, actually, you have a couple of different options. Either to use limit orders with this butterfly or any pattern that you would like to treat it just against these lows, or using the same stop buy order if market will jump higher. So you could step later if you will see the straightforward upward continuation. That's only for those who would like to trade release of the CPI numbers, who prefer to trade aggressively, and that it's not the part of our trading plan. We prefer to not do anything today. This is our basic approach. I just talked about these possible ways of the trading today, just to help you. Maybe this will give you some ideas. Maybe you will take some thoughts on this subject. It makes you easier to deal with it. So, but the conclusion remains the same. Our primary way is to wait, probably for retracement, and to not take any positions until the CPI report. All other stuff is only for those who would like to take.